Since the outbreak of CV-19, there's been a lot of postings and advisory around cash flow forecasting for businesses. With the downturn in sales, it's very important that people understand the impact of cash in terms of whether they're going to be able to get money in and certainly delay certain payments to suppliers. So with all of the comments that have been made of this, I really wanted to make a video to sort of explain our perspective on various elements of forecasting and how you can automate it. The most important thing really with a forecast for me is that it changes behavior in your business. Like any report, it's got to have an impact, and you need to understand what it is that you're forecasting to get the results and what you're trying to achieve in building that forecast. And there are various different types of forecasts. So the areas that we touched on there are going to look more at cash flow forecasting. So getting paid sooner, delaying your suppliers, will obviously and hopefully improve your cash position, which is critical at the moment. You could also look at detailed sales forecasts to incentivize your sales managers and help them understand how they're going to be performance remunerated, potentially with bonuses or commissions when we sort of get going again. You could also look at profit and loss forecasts for controlling costs and expenditure, so that certain department managers know exactly how much they've got to spend for the year ahead, to make sure that you come out at your annual targets. You could also look at more operational forecasts such as rota management and things like that, analysing historic sales or anticipated levels of sales and therefore a staff demand to ensure that you don't overstaff and incur extra costs based on a potential level of sales or transactions. But with all of these elements, the basis for forecasting is having accurate and real-time data. If your reporting isn't up to date or is delayed by a certain amount of time, by the time you created a forecast, you could well be into the period that you're looking to analyze anyway. So it's incredibly important that you automate the inputs and collect the data in an automated way to make sure that also you can then build an automated forecast, which means that you have a real-time forecast and an ability to adjust your decision making and change that human behavior. Without that, you're always going to be on the back foot and behind. Also, when building your forecasts, it's incredibly important to use all the data. Otherwise, you could just be looking at something which is incomplete and make an incorrect decision based on a level of information which is insufficient. So when we build our forecasting tools, it's incredibly important that we integrate the operations and the accounts and any sales systems so that everything is real time. Going back to what I was said before. You can also then build in any assumptions or growth predictions that you're looking to achieve, so that when you run your forecast report, hopefully at the click of a button, certainly when we do it, it's at the click of a button, all of that information is built in, and you can actually see exactly where you're going based on the assumptions that you've created in your forecast. Now, those forecasts can also be run daily, especially with the idea of rota management. You want to understand what rota or staff requirements you're going to need on any given day. For the other types of forecasts, it might be more period based, so you'd be looking at a monthly total rather than a daily amount. Once you've created your forecast, one of the most important things is obviously to track the accuracy of that forecast. As with any reports, if you're not going to look back at it and actually understand where it went right or wrong, there's not a lot of point to the report. It's important to have it immediately and then also track the accuracy of that report so that you can hopefully continuously improve your forecasting, I meant to say, and understand exactly where you are as a business, and make any subsequent changes in the latter parts of a year to perhaps compensate for anything that didn't quite go correctly in the past, or if you've done better than expected, you might have a little bit more slack in your budget going forward, but you've got an accurate way of communicating that message to any stakeholders. So this is really our opinion on forecasting. It's incredibly important at the moment, and I wish everyone all the best of luck with it.